Hi, everyone. I'm Jeanette Mulvey, the editor-in-chief of Co. by the U.S. Chamber of Commerce. We're so excited to have you today for our very first event of this new series called Co. Strategy Studio. Before we get started, I'd like to thank today's sponsor, Intuit, and our supporting sponsors, Dell, FedEx, Iron Mountain, and Oracle NetSuite. We appreciate your partnership in this series. Today's event is focused on how small businesses should prepare for tax season. And I know you're already working on that, but we're going to talk about what you can do for the remainder of this tax filing season and how you can keep your business in good tax health all year long. Our first guest is a small business accountant who also happens to be an entrepreneur herself. So let's get started. So let me introduce you. This is Al-Nesha Jones, and she's the founder of ASE Group. It's a CPA firm located in West Orange, New Jersey, and she focuses on helping businesses and individuals protect what's most important to them through compliance, minimizing liabilities, and practicing smart record keeping. And we're going to talk about all of that today. So welcome, Al-Nesha.
Thank you so much. Thank you for having me.
So you're in a very unique position because you're helping small business owners with this, but you are also a small business owner yourself. So can you talk a little bit about both of those things and how that affects how you approach your taxes?
For sure. So as an accountant who's also a small business owner, I feel like it gives me firsthand experience with what clients are experiencing, some of their frustrations with things like estimated tax payments and budgeting for things like that. So I feel like I'm in a position where I understand them because I am them, and I'm able to convey what I'm experiencing in my own business to clients, potential and current. I look at taxes as a big part in building a strong and sustainable business. That's what our goal is. It's not an option. Taxes are not an option for, later when you have time or capacity or additional capital. Taxes are a part of growing a strong and sustainable business. And although this might be like an unpopular opinion, I use my tax bill as one of the metrics to measure my business's success. So what do I mean by that? I'm in business to make a profit, and profitable businesses pay tax. So the fact that I'm receiving a tax bill and my tax bill may be a bit higher than the previous year means that I've earned more profit than I earned in the previous year. So as someone who's working to grow a sustainable business, wants to help other business owners grow sustainable businesses, I think it's really important as a CPA and an entrepreneur to make that connection for clients. And although we work really hard to minimize liability, it's extremely important. That's certainly our goal. We want to also make sure that clients are prepared for tax bills and they're not thrown off by a tax bill at the end of the season.
Sure. So let's talk a little bit about that. This is like your busiest time of the year. So thank you for doing this during your busiest time of the year. And I love that you said, you are them. So you really are feeling what every small business owner is feeling right now. So for your company, what is really your most effective tactic that you and your team use for filing your own tax returns and making that process as painless as possible? And I love your positive attitude about it being a metric of success.
Thank you. I appreciate that. First, we start early. We do our tax return first. There was a time when we put ourselves last and we put all of our clients before us. We found that we can't tell clients to prioritize filings to stay on top of things if we are not. So we do our own internal bookkeeping once a week. We file our tax return before we file any of the other clients' tax returns. And we internally have monthly meetings to go over financial performance so that we know exactly how we're performing against our goals, against our budget. If there's anything we need to tighten up, we're aware of it right as it's happening. And then we're prepared to make those estimated tax payments because we like to set aside money monthly to prepare for those payments.
So you actually kind of just started to answer the next question I'm going to ask you, which is that we think about, tax season, but it's tax season all the time. So you just said like one of the things that you do, but can you give some advice on what you do and what other business owners can do in terms of like, how can you be preparing for tax season all year?
I love that you acknowledge that tax season is all year. Tax season is literally every month. All seasons are tax season. The best thing you can do is keep good books and records. I cannot stress how important it is to stay on top of your bookkeeping. Bookkeeping is not a pre-tax prep process. Bookkeeping is a regular process for tax planning, for growing a strong and sustainable business. So, first things first, keep up with your books and records. Secondly, speak to your accountant and or your bookkeeper regularly. They're not mind readers, and they need to know what your plans are. Tax planning, and tax planning includes estimated tax payment planning, requires that they are aligned with your goals and what you're thinking of for the next 6 months and even 6 years. So have those conversations regularly and talk to them about what your struggles are. If you're not sure how to set money aside for estimated tax payments, tell them that. They can help you come up with a plan. We have clients who submit estimated tax payments every month because it helps them to get the money out of their account. If they hold it too long, perhaps they would spend it. So use your accountant as your strategic partner so that they can help you. And that can only happen if you have good books and records for them to review on a regular basis.
So, you mentioned estimated taxes, and I wanted to make sure that we talked about that because I think for some small business owners, especially people who might just be starting out and who are lucky enough just starting out to actually be making a profit,
Yep.
the idea of estimated taxes might sound like something that's like optional, like you put yourself on a payment plan that like you sort of referenced about what you do at your business. But can you talk about estimated taxes and what they really are and what the obligations are of small businesses?
For sure. And I'll speak specific to small business owners because small business owners are not the only ones required to make estimated tax payments. But for small business owners, if you anticipate having a tax liability federally of $1,000, and that's a pretty small tax bill, just $1,000 means that you needed to make estimated tax payments. I'm located in New Jersey, and in New Jersey, that limit is only $400. If you anticipate having tax bills in these above these amounts, the government expected you to make estimated tax payments. And the easiest way to explain it to a new business owner, if you're coming from having a job where you received a paycheck and a W-2, your estimated tax payments were what you paid biweekly or weekly through your payroll. The government still expects that money throughout the year. So it's not really optional. If you don't make those payments, they will charge you interest and they will charge you penalties on the underpayment amounts. So it's important to pay it because, again, strong and sustainable businesses do not waste money on interest and penalties. You want to be paying that throughout the year, and the government expects it as you are earning it. So even if you pay your full tax bill on April 15th, you could still be subject to interest and penalties because the government did not want it on April 15th. They wanted it throughout the year. And that last estimated tax payment was actually due on January 15th of the next year. So it's important to know that these are not optional. These are not things that you could put off. And the only way to know how much to remit is to keep good books and records so that you can calculate estimated tax payments from there.
Let's talk about keeping good records. Can you tell us a little bit about the kinds of advice, well, either your own practices in your own business or the advice that you would give about the kinds of documentation and reports a small business should be keeping throughout the year that will make this process of knowing what your income and tax liability might be?
Sure. I find that income is normally the easiest to document. People love to calculate their income. It's exciting. They know exactly where the money came from. There are invoices or reports that can be run from your POS system. So people like to calculate income. I find that where we struggle tends to be with expenses. And these are my suggestions. If you don't already have a business account, banking, or credit card, I strongly suggest that you open one and use those solely for business expenses. When you have activity all over the place in your personal accounts, several different credit cards, personal and business, one, you're now commingling funds, which is problematic in and of itself. But secondly, it's difficult to track. And if you lose sight of expenses, you potentially miss out on that deduction. So first, keep your expenses into specific accounts, preferably business accounts. If for any reason you can't get a business account, dedicate a personal account solely to business. Second, which I think is really important, even though your bank will track your expenses and where you spend money, in the event of an audit, that will not be enough, because you could go to Staples and buy 100 chocolate bars. So just spending money at Staples is simply not enough to say I have office supplies. So it's important to have receipts. I'm not a big fan of keeping files and files of paper receipts. So I love a scanner. And at this point, we can even use our phone for a scanner. You can take pictures, you can create PDFs right from your phone, and get into a regular cadence of scanning and saving these receipts. You can save them in the cloud. You can save them on a folder, on your backup drive, wherever it is you choose to save them. My preference, because we use and love QuickBooks Online, my preference is to attach the receipt right to the transaction so that we're not using any of our storage space. It all lives in QuickBooks Online. But get into a rhythm with saving your receipts. This will help you in the event of an audit, but it'll also help you to keep these records intact without creating a mess with a bunch of papers. Again, if you don't know what system could work for you, use your accountant or your bookkeeper as your strategic partner. Let them help you create a system. The biggest way to get over this hurdle is to get into a rhythm.
Sure. That makes right. And have it just be part of your ongoing weekly or monthly business practices. I have a couple of questions here that the audience sent in, so I want to ask you one of those.
Sure.
Are there any tax deductions that are often missed by small business owners?
Yes. I find that small business owners tend to miss the mileage deduction. And for 2022 specifically, the government kind of threw us a little curveball and changed the mileage deduction mid-year. So it's very important that if you have not prepared your tax return yet and you need to review your mileage log, that you have that mileage log separated by date. January 1 through June 30th will have a different rate than July 1st through December. Now, that mileage deduction does require that you have a log, that you keep a log. If you don't have that already in place, if you use a calendar for appointments or when you were traveling, you can certainly go back and recreate that, but you do need documentation to take that deduction. Some other things are, go ahead, Jeanette.
Oh, no, you know what? I wanted to just ask you one more question because, but I want you to finish that thought. So go ahead. What are a couple other things they miss? Yeah.
No worries. These were things that we implemented in 2022 for our firm, so I think it's important to share with you all. One, we implemented a 401k plan for our employees, which was exciting in and of itself. But more importantly, the government does offer a credit for adopting a new 401k plan and or offering automatic enrollment. So if this is something you're doing to retain employees, to attract quality talent, there's also a tax credit out there for you. This credit could be up to $5,500 a year, and you can claim it for up to 3 years. So certainly something to look into thanks to the Secure Act. The employee retention credit is still out there. If you were impacted by the pandemic, meaning your business, and you either had to shut down or you paid employees when you all could not open or could not serve your customer base, you may qualify for the employee retention credit. Most recently, I've seen payroll companies helping their clients. So if you have a payroll company, that could be a great place to look for resources to help you qualify for that employee retention credit. And then healthcare. We implemented healthcare for our team members last year. There is a credit for small business owners if you offer your employees healthcare. The nice thing about this credit
is so great. Oh, sorry.
right?
Go ahead.
No, I love
Yes.
it. Go ahead.
Go ahead. We have about 30 seconds if you want to wrap up that thought.
I was going to say the smaller the business, the bigger the credit. So this is really designed for micro businesses, less than 10 employees, not paying their employees a ton of money. So this was really built for the small business owners like the me's of the world.
I love that. And I'm glad that you got the chance to get that in. Believe it or not, our 15 minutes are up. So I want to say thank you so much, Al-Nesha. I'm a Jersey girl myself, so I'll see you around the Garden State. We really, really appreciate it. This was great advice. Thank you so much. Our next conversation will focus on implementing successful strategies into your tax season with advice from an expert who has seen it all. So we're going to pause right now. So goodbye, Al-Nesha, and we're going to pause for a transition. All right, I am so pleased to welcome Joy Shaw. She is the Director of Tax at Intuit and has been a part of developing TurboTax and Pro Series products for close to 30 years. She also leads Intuit's tax expert community, where she advises businesses of all sizes on the latest in tax policy and strategy. Hi, Joy.
Hi, I'm happy to be here.
Yes, thank you so much. We really appreciate it. Let's start with just asking you what common tax process problems do your small business clients have when they approach you generally?
You know, it's funny. So many of the things that I was going to mention, Al-Nesha has already mentioned, and she has run into. And so some of this may sound repetitive, but some of the things that we see very often, and especially with new businesses, is like she mentioned, keeping track of your personal versus business expenses. And the strategies about having separate accounts for each one of those is really important and makes it so much easier when it comes to tax time. Also, the timely tracking of your transactions, the timely tracking and reconciliation of your bank accounts, how sophisticated your profit and loss documentation is will have a big impact there. And so sometimes we have to help people a lot in that area because they don't have those things automated. And then a lot of the things they ask us, they come to us about is filing entity type. Should I be a sole proprietor? Should I be a partnership? Should I be an S Corp? And so advising people on which is the best option for them is all dependent upon some of their liability risk, their long-term, their vision for their business. If they're going to have employees, do they want to have retirement plans? And so we do see a lot of that. And so our advice I typically follow is kind of threefold. One is to simplify, and that is to simplify your records. So if you have multiple accounts, consolidate. Get more organized in simplifying the process and the steps you take during the year. The other is automate, and that is to the extent you can automate payments, you can automate receipts. That will simplify your recording. And then the third one is integration. And so I'm spoiled because I've gotten to work with QuickBooks for so many years, and we have a lot of integrated systems so that payment, bill paying, invoicing, booking transactions, payroll, sales tax, benefits can all be integrated to combine into reports that can then help during tax time. So those are probably the most common ones and very, compares with what Al-Nesha said too.
Yes, it does align. What are some of the changes or new developments in the tax code small businesses should know about as they file their taxes this year? I know Al-Nesha mentioned the mileage. What are some other things you know?
One of the interesting things, and it's not necessarily new this year, but it's disaster filing extension deadlines. And it seems like in the last 5 or 6 years, we've had a lot of those. Being from California, I know we have an extension this year for a lot of the flooding and things like that happen. So the extension for actually filing tax returns is extended in many areas. So that's a little bit different, and that is updated on a regular basis by the IRS. The other thing that other folks may have heard about is the information reporting for 1099K returns, information returns, and that's for third-party network reporting, like your credit card reconciliations and that. And you as a small business may not have gotten it in the past unless you got more than $20,000 and had more than 200 transactions with that network provider. They proposed to lower that to $600 this year, and didn't matter how many transactions you had. But then at the last minute, that the IRS changed their mind there, and they delayed that till next year. So we have a little relief there on having to deal with the complexity that comes with the reporting of that form. Just one other thing I think I'd mention here for this year is the business meals. Due to COVID, the last 2 years for 2021, 2022, we are now allowed to take 100% of meal expense that you pay, for employees in that if you pay it to a restaurant. And previous to that, it was 50% was allowed as a deduction, and it reverts back to that in 2023. So it's something to know that will be a change from the return that you're filing for 2022 and what you can do for 2023.
Great. So far we've been talking mainly about income tax. Let's talk a little bit about payroll tax, because that's a separate tax that all businesses and small businesses have to pay, often quarterly, I think. So can you just talk a little bit about payroll taxes and any changes, or just how businesses should be thinking about their payroll taxes?
Sure. Usually for payroll tax, the hardest part is setting up any new employees, determining whether it's a contractor or an independent contractor versus an employee, and then where you need to file any payroll taxes, what jurisdictions you're in. And so it's really important when you get a new employee that you set up their addresses, you have their job titles, their occupational codes, so that new hire reporting is done correctly, and then your quarterly unemployment wages are paid accurately too. So most states and localities have registration processes where you need to register with each of those agencies before you can even deposit any of your payroll taxes. So that's just a common thing that all new businesses with employees have to do. The one thing that's probably changed this year is there's a lot more state-run paid family medical leave. There's been a federal one, but this is state-run. And these are run by different agencies. Therefore, you have to register with these agencies and actually pay to a different agency than what you're used to with your payroll taxes. And currently, about 11 states and DC have these plans, and 25 more states have this in proposed legislation. So that's another registration, another agency to deal with.
Now, let's talk about sales tax. That's a different kind of tax that businesses have to pay.
Yeah.
Can you talk a little bit about that and how it relates to the filing of your annual taxes and just how you keep track of that separately?
Sure. Sales tax, in general, this is something that if you use like a QuickBooks or a program like that, many of them have built-in sales tax tables and things like that. So once you register with either the localities or the states where you do business, your system should have updated rates so that you can accurately report and then also pay those deposits. The interesting thing, probably not news anymore, but about 5 years ago, there was a U.S. Supreme Court decision called Wayfair that then allowed states to collect sales tax from other states where you didn't have a physical business activity there. And so there are a lot more jurisdictions now where you are collecting sales tax. And what's most important is that you do collect it, you do remit it timely, and it is recorded through your systems. So it's booked or on a regular basis for doing your sales tax reporting.
So that's especially important if, for example, you're selling virtually online.
Yes. And so it was a big change, like I said, when this first got implemented or this decision first got made. And so most folks should be familiar now with the rules around it. But if you introduce a new product or a new service, you need to do the research on whether it is subject to sales tax and to what extent.
Then I have an audience question here about some commonly missed tax credits and deductions by small businesses. Do you want to talk about that?
Sure. I think Al-Nesha mentioned a couple of them. The employee retention credit is often missed, and it is a retroactive credit, so that even if you had this this opportunity to take it in the last couple of years, you still have a couple more years to actually get this credit. And then there's some credits for energy for contractors who work in that space who can get a credit for the work they do there. There's a credit for research activities, and this is against your payroll taxes, so it gives you an opportunity to do that. There's a commercial clean vehicle credit to the extent you put vehicles, whether it's a lighter weight one or a bigger kind of utility truck one, into service, you can get a credit in that space. What's one of the things that is most often overlooked is the timing of your expenditures. And it depends on when you put your purchases in place, how much you can write off from those more capitalized assets. And you have that option, but if you are purchasing most of your things in the last quarter of the year, for example, you're very limited on what you can take as a deduction. And so the timing and the planning around when you do your major, bigger purchases is pretty important. So that's one that I think is overlooked, and you can keep track of on kind of on a monthly basis. You know where you stand. I think, and Al-Nesha mentioned another one about the retirement plans that are available for small businesses. And so that's also an opportunity for people to look into what they can do for credits and also additional deductions.
A thing we didn't talk about before is that if your business is being paid via a peer-to-peer payment platform, I know there's a change in the threshold for reporting that. Do you know about that? And could you give us any advice on that?
Is that the 1099K one you were talking about?
Exactly. Yeah.
Yes. Yeah, that one, the threshold was going to be dropped down to $600 and unlimited transactions, but it actually was delayed for a year. So it went back up to its original threshold. Yeah. So it's back to 20,000 and 200 transactions, at least until next year.
So if your business is collecting through a peer-to-peer platform and if you don't exceed $20,000 or 200 transactions, you don't need to worry about the 1099.
From a single provider.
Right. Okay, yes. Good. In our last 30 seconds, just can you talk a little bit about your own philosophy about documentation and how long to keep documents?
Sure. The standard practice is 7 years to keep documents. I was going to say that, the best way to do that is to back up your records to the cloud. Make sure you have those tracking mechanisms in place so it's done on a regular basis. Updating your more permanent documents, your loans, your operating agreements, your shareholder agreements, and keep those in a safe and secure place that's off-site from wherever you may be working, and have it always backed up and secure. Security is another big piece that all businesses should be putting those safeguards in place, policies and procedures in case there's ever an audit or a question about your record keeping.
Great. Well, thank you. I think that's a great place to leave it. I really, really appreciate the advice. I think it's excellent tactical advice for small businesses. So thank you, Joy. And of course, thanks to Al-Nesha who joined us earlier. We hope the audience found this useful. I want to thank our sponsor today, Intuit, and our supporting sponsors, Dell, FedEx, Iron Mountain, and Oracle NetSuite for helping bring the program to you today. For more resources on how to do your taxes, please check out Co. You can visit at growwithco.com, and we'll be sending you some articles in a follow-up email. Thank you to all of our chamber members who have joined us today. For those of you who are interested in joining the chamber, please check out the link on the right-hand side of your screen. We'd love to have you join us. And we will be back on March 30th for the next episode of Co-Strategy Studio focused on managing cash flow. Thank you so much. We'll see you soon.